Hello and welcome to my morning note, coming to you again from New York. Now there's a lot of excitement here that stock markets are finally back at new record levels as measured by the S&P 500, and a lot of surprise about that as this is coming to juncture when China is actually down for the year and when there are many new problems in the Eurozone. However, there are some considerable reasons for optimism in the US, and perhaps one of the most obvious concerns the natural gas market. There's been a revolution in the supply of natural gas, and that has changed the dynamics of many industries and many prices here in the US. With me now to discuss this is our US commodities correspondent, Greg Meyer. Greg, thanks very much for talking today. Let's start by taking a look at the price of US natural gas. And we can see that it is actually rising very ominously from quite a low level. What's been going on with the gas price in the last few months? What's driving it?
Well, yes, the U.S. domestic gas price rose above $4 per million BTU this week, and that's almost double what it was, actually more than double the lows of last year, the highest since September of 2011. The commodities that we track at the FT commodities team, gas is the best performing commodity so far in 2013.
But is that more to do with the fact that it was extremely cheap to start off with, rather than that anything
Yes, I mean gas, and it still is extremely cheap. I mean gas averaged $9 in 2008 during the big commodities boom, and it has slowly, ebbed since then, largely thanks to the shale boom.
Now you've got a new chart here, which tries to show exactly how much this is a US specific shale specific event. We're looking at the price of UK national gas compared to Brent crude, and then also at US natural gas, and it looks as though the US is distinctly following marching to a different tune. Is that a fair statement?
Yes, absolutely. I mean, the gas markets have always been geographically segmented because it's gas, and you can't just pour it into the hold of a ship unless it's liquefied natural gas, which is a extremely cost-intensive undertaking. And the UK gas market receives different supplies from Europe and from LNG, mainly Qatar. If you look at the price of gas in Asia, it's actually considerably higher than the price of gas in Europe because their gas prices are largely indexed to the oil price. So the gas market, the U.S. gas market, is really emblematic of really illustrates the impact we've had from shale, and as you said, that has huge implications positively for petrochemical industries, fertilizer industries, et cetera. Not so positively for example, the rail industry, which has seen coal volumes dropping off, although seem to be pretty happy shipping oil as well.
There does seem to be, there are some real bull points for US stock markets out of this. Now let's take a look at why prices might now be rising in the last few months. What we're looking at here is supplies compared to the 5-year average for the time of year. What's gone on so far this winter and spring?
Yeah, I mean, natural gas traders are a pretty sophisticated lot and like to use very complicated analysis and of why the markets move the way they do. But as one senior trader told me yesterday, in this case it's really quite simple. It's just been darn cold in the northern U.S. This past March. The winter started out relatively warm, and then I've been wearing a hat to work every day in March, which is quite rare. And underground stocks, which is what the chart shows, keep drawing. They drew another 95 billion cubic feet today. Normally at this time of year, they're building again, sort of replenishing stocks for next winter.
Okay, Greg, thank you very much indeed. I think the message is fairly clear. There are always profits and losses to be made from short-term fluctuations in commodity markets, but we shouldn't be too thrown by the recent rise in prices. It's obvious that there is a very real and very significant improvement in US competitiveness thanks to the change in the dynamics of the natural gas market, and that does at least justify some of the current optimism you see here in the US.